Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
All right, Janine, let's kick things off with a rather serious development in the mortgage world today. Flex Home Loans is facing a shutdown after the Financial Services Regulatory Authority of Ontario, or FSRA, uncovered some significant regulatory breaches.
That's right, Steve. The FSRA is moving to revoke the license of Flex Home Loans and penalize its owner, Michael Yosher, due to findings of unlicensed mortgage lending and misleading disclosures. It's quite concerning, especially since the company reportedly bypassed licensing rules and might have deceived some vulnerable clients.
The allegations are indeed serious, Janine. According to the FSRA, Flex Home Loans extended 244 mortgage loans totaling over $7.6 million between 2020 and 2021 without holding a proper mortgage brokerage license or being exempt from licensing requirements. This is a major oversight, and it seems they issued these loans directly to the public, thereby bypassing crucial oversight and borrower protections.
And what's really troubling, Steve, is that among those 244 mortgages, there's a case involving two vulnerable senior citizens. They believed they were consolidating home service equipment rental payments, but were allegedly misled into signing a mortgage for over $30,000. This mortgage was then transferred to investors and administered by Flex Home Loans.
Yes, and the FSRA has proposed a compliance order that would require Flex Home Loans and Yosher to cease their mortgage lending activities. They also need to notify current investors about the impending license revocation and assist them in securing a new mortgage administrator or facilitate self-administration of their investments. It's a comprehensive order aimed at protecting the investors and the public.
The FSRA is also seeking to revoke Flex Home Loans' mortgage administrator license and impose a $10,000 administrative penalty against Yosher. It's part of a broader effort by the FSRA to crack down on improper mortgage brokering and lending conduct in Ontario. It's essential to ensure that mortgage brokers and lenders operate within the legal framework to protect clients.
Absolutely, Janine. This case highlights the importance of adhering to legal and ethical standards in the mortgage industry. The FSRA is making it clear that principal brokers are ultimately responsible for the conduct of their employees, and this is a stern reminder of those responsibilities. We'll continue to monitor how this situation unfolds and what it means for the industry as a whole. Let's shift gears and talk about the latest changes announced by the Canada Mortgage and Housing Corporation, or CMHC, regarding multi-unit mortgage loan insurance premiums. This is quite a significant move, Janine, as the CMHC is now tying premium rates more closely to the risk profile of the loans.
That's right, Steve. These adjustments, which will take effect on July 14th, are part of CMHC's annual premium review. They will apply across all multi-unit mortgage loan insurance products, including MLI Select, which is particularly interesting.
The idea here is to align the premium structure with the risk characteristics of the loans being insured. This means that loans with lower borrower equity, or those for new construction projects, which typically carry higher underwriting risks, will see adjustments in their premiums. It's about ensuring that these products remain sustainably priced and aligned with capital requirements.
Exactly, and it's also about making sure these products are available across economic cycles. What's noteworthy is the new premium discount schedule within the MLI Select applications. Borrowers can benefit from reduced premiums if their projects achieve measurable social outcomes, such as affordability, accessibility, or energy efficiency.
It's a strategic move by CMHC, and it aligns with the updated capital requirements from the Office of the Superintendent of Financial Institutions. Under the revised mortgage insurer capital adequacy test, CMHC needs to maintain larger capital reserves for higher risk loans. This includes loans with minimal down payments or more complex construction profiles.
Yes, and while these changes seem to be a step in the right direction, it's crucial to consider the broader context of rising costs. Advocacy groups, like the Investors for Paris Compliance, have raised concerns about the increasing cost of home insurance due to climate risks. They're calling for more transparency and investigation into these rising premiums.
That's a valid point, Janine. The Financial Services Regulatory Authority of Ontario is being urged to look into these issues, as home insurance rates in Ontario have risen significantly. According to a My Choice Financial Inc. analysis, these rates increased by 84% between 2014 and 2024, far outpacing inflation.
It's alarming, especially when you consider the Insurance Bureau of Canada's report of $8.5 billion in insured losses in 2024 alone, which was nearly 3 times the total in 2023. Major events like hailstorms in Calgary and floods in Quebec contributed to these figures.
Indeed, it is a complex issue that highlights the interconnectedness of mortgage insurance, housing markets, and climate-related risks. We will definitely keep an eye on how these developments impact the housing and insurance landscapes in Ontario and beyond. Our final topic today revolves around the growing role of artificial intelligence in the mortgage industry. It's fascinating to see how AI is being used to enhance efficiency and streamline various processes. A recent article by Julia Stratton in Mortgage Tech News highlights this trend and provides valuable insights into how mortgage professionals are integrating AI into their work.
That's right, Steve. AI is becoming a crucial tool for mortgage professionals, helping with everything from writing emails and analyzing client data to brainstorming marketing ideas and more. It's interesting to see how it's transforming the way we work.
Exactly, Janine. The article mentions that one of the challenges professionals face is knowing where to start with AI tools. Tom Hall, founder of Blue Mortgage, points out that people are eager to use these tools but often find it hard to know where to begin. However, once they start experimenting, they can quickly become proficient.
And the benefits are quite broad. AI can support sales and marketing activities, assist with customer service by replying to emails, and even help with office tasks like income verification. It's also useful for brainstorming and research, acting as a research assistant to keep professionals updated on market developments.
Reuven Gorsht, co-founder and CEO of Deeded, describes AI's potential to generate business almost on autopilot. He advises starting with basic versions of AI tools and upgrading only if necessary. This approach ensures that users aren't overwhelmed by unnecessary features and costs.
That's a sensible approach, Steve. Gorsht also emphasizes that AI is most effective when used to enhance tasks that professionals already understand. It's not a silver bullet for all challenges, and it's important to provide quality input to get quality output.
Absolutely, Janine. The article highlights several AI tools, each suited for different tasks. For example, ChatGPT is great for writing emails and doing light research, while Claude is more suited for in-depth analysis and database management. Perplexity excels in analysis and coding, and Google's Gemini offers versatility across various tasks.
And as Reuven Gorsht mentioned, while AI can make tasks more efficient, it's crucial to maintain a human touch. AI can make mistakes, and it's important to proofread its output and ensure the information is accurate. This is where the expertise of professionals comes into play.
Privacy and compliance are also important considerations when using AI. Gorsht suggests anonymizing data to protect client information, especially when using free tools that might monetize the input data. It's about being mindful of how we integrate AI into our workflows.
Indeed, Steve. Tom Hall believes that while AI will not replace mortgage professionals, those who embrace AI will have an edge over those who do not. It's about using AI to augment our capabilities, not replace them.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.